All right, we are at the top of the hour. Well, hello and welcome everyone. This is the webinar Model Risk Management and Ethical AI Adoption. This webinar has been brought to you by the Data and Analytics Virtual Forum of the International Actuarial Association. Many thanks to the Data and Analytics Virtual Forum and especially John Ng for producing yet another great webinar in the series. My name is Tim Bishop. I will be your moderator today. I'm a member of the Data Analytics Virtual Forum representing the Canadian Institute of Actuaries. I'm also a co-chair in the IAA's AI Task Force. So for those of you who would be interested in learning more about the AI Task Force, the work of that, and particularly joining our online community, if you haven't already done so, please visit and join www.aiforactuaries.org and join our online community for all global actuarial community for everyone to share, discuss, and collaborate on all things related to AI. So with that, I would like to first ask Nancy Kelly from the IAA staff to take us through some of the housekeeping items for this morning, please. Thank you.
Hi, everyone, and welcome to this webinar. Just a few housekeeping notes before we begin. Verbal capabilities have been turned off. However, questions or comments can be submitted by clicking on the Q&A icon at the bottom center of your screen. And we will address those at the end of the presentation. And if should there be too many questions, we will address them and post them along with the recording and the slide deck within the next couple of days following this webinar. A quick note, disclaimer for those joining and listening to the presentations. I just want to clarify that any views or opinions expressed in the presentation are solely those of the presenters and do not reflect any policies or positions of the IAA or any other organization. And thank you for joining again, and we will begin. Thank you.
Thank you very much, Nancy. Appreciate that. I just remind once again, please submit questions at any time as you like through the Q&A function on Zoom. That said, we will be holding responses to questions to the end of the session. So submit when you like. We'll respond towards the end. And as Nancy said, if there's too many, we'll take them offline. Now, great. So on to the presentation. I would first like to introduce Matthew Byrne, who will speak to us about model risk management and considerations given the context of AI. Matthew is the head of the actuarial function at National Farmers Union Mutual Insurance Company in the UK. He's a casualty actuary, and Matthew is an active volunteer with the IFOA. I'm always supporting volunteerism and supporting our profession, but he is the current chair of the ethics work stream of the the data science community of the IFOA. So with that, off to you, Matthew, please.
Yeah, thank you, Tim, and thanks to Nancy as well. Delighted to be able to present today. I'm going to kick off by getting us all on the same page regarding what is a model, what is AI, what is model risk, and some thoughts about how we can manage and govern model risk. And I'll also talk more about some of the opportunities for actuaries in this age of AI that we find ourselves in. Before I start though, whenever I talk about models and model risk, I like to include this quote from the statistician George Box, who famously remarked that all models are wrong, but some can still be useful. And I think that's, even though he wrote that back in the 1970s, long before the rise of Gen AI, I think it's something that's still very true today. So the first thing we need to do is be clear what we mean by a model, and that can be tricky to articulate. Luckily for me, a previous UK actuarial profession working party paper, the excellent Model Risk Illuminating the Black Box, they had a go at this some years back, and they took their definition from the USA Board of Governors of the Federal Reserve System, shown on the side. And I think that's, again, a definition that still stands up today, even though it had been created prior to the age of generative AI and some of the latest tools and tech. All that's really happened, and we'll say more about this in a moment, is that some of the inner workings of models have become even more opaque and complicated than they used to be. If I try to paraphrase the definition that's on the slide there, the core feature for me is that any model must have three elements: inputs, calculations, and outputs. So if you have something with those three things in it, it's a model. So how about defining artificial intelligence, AI? Well, given the wide range of tools and techniques under the AI umbrella, that can be even harder to pin down than defining a model. But I like to think of AI as existing on a spectrum with other types of models. So on this slide here, what I've had a go at is a spectrum from left to right of increasing model complexity. If we start on the left, we have the kind of traditional actuarial or accounting idea of, I'm going to build a model, I'll build it in a spreadsheet. The user here is in control of the whole thing, the structure of the model, the assumptions, coding the formulae. One advantage of that is the user can definitely fully explain the outputs. And when I first got involved in non-life actuarial reserving, for example, the way I implemented the chain ladder technique for reserving was as one of these traditional models. I built the triangles and formulae myself in a spreadsheet. I manually chose the development patterns after I'd inspected the historic experience. Moving into the sort of middle phase of the spectrum, I put machine learning there. And here the core idea is that the computer takes over the task of setting the model parameters by fitting a solution to the data itself using a particular choice of algorithm. The illustration shows an example of a curve fitted through some data, though in practice, machine learning models will often have hundreds, if not thousands, of dimensions. So if you're mathematically inclined, the curve here would be more like some sort of high-dimensional surface. When I worked in non-life pricing and carried out loss cost modeling using generalized linear models, we pressed a button and the software found the solution for us. That was basically machine learning happening, even if at the time we weren't referring to it as ML. Machine learning, and indeed most of what's called AI these days, can only find patterns and solutions that exist within the data that you give it. So with the GLM approach for pricing, having got the computer to solve for the best parameters, we still had to go through the results by hand to check and ensure that we hadn't overfitted or that there weren't any outliers in the data that meant that the solution might be unrealistic. These days, there are lots more algorithms that actuaries can use instead of just the GLM approach. There are different and new and quite exciting algorithms that are being trialed across all areas of actuarial work, not just in pricing. Finally, on my model risk spectrum, on the right-hand side, we come to artificial intelligence, AI. I like to think of this as just the most complicated end of machine learning. Another name for it is deep learning. And primarily this consists behind the scenes of nested arrangements of a neural network algorithm. One reason it's referred to as artificial intelligence is because it can do things that used to require a human. So you used to need a human to drive a car, but now you can get AI to drive a car. You used to need a human to write a poem, but now you can call up a chatbot and ask for a poem on anything you like. One thing you'll notice just with the diagram I chose for AI is it looks complicated, and the latest Gen AI chatbots or image generation tools have literally billions of parameters inside them, and you really wouldn't want to have to check those by hand. And that leads us neatly to thinking about some of the risks within models. There are lots of risks in models, and I've put up a non-exhaustive list on my next slide. So here we go. And in the interest of time today, I'm just going to talk through a few of these rather than every single one, but feel free to ask questions in the question session if you want to pick up another one. In particular, what I wanted to do was talk about how AI models are evolving the way the risk is within models. So if I pick on data to start with, AI models can use much broader, much more diverse, very large and quite opaque data sources. Most chatbots, large language models that we use have been effectively trained on the whole internet. I mean, they haven't been trained on the whole internet, but they've been trained on such massive swathes of public domain content that it might as well be the whole internet. What does that mean for actuarial questions like whether the model's data is complete or accurate or reliable, and how can you tell? If we turn to people risks, historically with people risks for models, it would be the idea of, you had one colleague at a company who built a spreadsheet, and when they leave, no one else understands how it works. That could still be a risk, but also with AI and generative AI in particular, we have the risk that the firms and the people using the models may not have anyone who really understands enough about how they work and what their limitations are. And they may just be being reliant on the vendor's sales pitch for knowing what they can do with these models that they're buying. And then the last one I'll highlight here is ethics. So AI has brought ethics much more firmly in the spotlight in relation to modelling, but Fei will be saying a lot more about this later on. So we'll all listen out for that. To deal with how these risks are evolving, our model testing and validation toolkits need to be adapted and strengthened to be fit for purpose in this age of AI. So what can we do to manage the risks? So on the left here, what I've done is share effectively a version of the actuarial control cycle. And again, this particular graphic comes from that UK actuarial profession model risk working party that I mentioned earlier. So I wasn't directly involved in it, but it was an excellent paper and definitely a good reference, even though it's a few years old now. The key stages in the model risk management cycle are reasonably straightforward. Identify the risks, measure them, monitor them, and then mitigate and report on them. One of the things I'm actually doing at work at the moment, alongside other colleagues in the risk division where I work, is developing an improved process for model risk assessment. And I'm looking to build a heat map of model risk that will look across various different categories of risk to build up as full a picture as I can of the nature and scale of modelling risks across our organisation. And I'm designing this year in a way that will, as best I can, handle all types of models, from those traditional actuarial models to machine learning and AI, and pick up models whether they've been built in-house by an actuary or another analyst, or if they've been purchased through some third-party supplier or baked into some other software that we already have. On the right-hand side of the diagram is a very simplistic illustration of how we can govern AI within an organisation. Typically, I'm aware of two approaches that are commonly discussed. You could have something like a chief AI officer who would sit at the top on that kind of diagram, and maybe they would take responsibility and control over all AI models. That clearly gives a lot of control and sort of simplifies explaining how AI is controlled. But I feel it could be quite difficult for that chief officer to really understand in enough detail all of the models across the business at the lower levels. And it also might be seen as stifling innovation for the business units if they have to wait for someone higher up to sign off or review a particular model before they can get on and use it. The other approach, and the same diagram applies, you just have to look at it differently, is to delegate the model management to each of the business teams at the bottom of the diagram. And then that central top layer of risk management can set guidelines or policy that fits with the firm's risk appetite to control and have oversight of the modelling that's happening. This is more of a kind of trust and validate kind of approach, and to me it feels more like how traditional end-user computing applications have tended to be managed within organisations historically. So what does all this mean for actuaries? So I found that AI is impacting almost all business areas at work, either in terms of new tools or new challenges or new risks. And I think our actuarial skill set, so things like our data confidence, our understanding of model risk, our ability to communicate complex ideas more simply, can make us really well placed to help our colleagues to understand both the opportunities, but also the limitations and the risks associated with these new AI tools. Over the last few years, I've spent a lot of my time helping colleagues ranging from new actuarial trainees right the way up to non-exec directors to help them gain a better understanding of AI, what it is, how it works, the opportunities and the risks, and to try to cut through some of the hype that you hear from the salespeople offering these models to firms. So if you, as an actuary, aren't already involved in wider AI activity in your organisation, why don't you reach out and offer your help? Because I'm sure if it's anything like my organisation, your colleagues will be delighted to have someone help them understand and get the most from these tools. And one thing that any colleagues involved in AI deployment might be interested in is my next slide, where I've just provided some examples of recent headlines showing the challenges that some firms have faced in trying to maximize the benefits of Gen AI in particular, either as a customer-facing tool or to improve productivity. As we heard from George Box at the start, all models are wrong, but some are useful. And in the case of generative AI, I think it's about identifying that sweet spot of use cases for which the risks don't outweigh the benefits. And on that note, I'll end my sharing and hand across to Fei. Thank you.
Thank you very much, Matthew. A couple of things that really jumped out at me on that presentation. One is you called out the hype with AI, which is considerable, but beneath the noise, there's definitely something that I believe everyone has to accept and get on board with. But I also sort of tapped into your trust and validate model. I think that's sort of the traditional actuarial model of risk management. That's my opinion, because contrasting that, I've heard of actuaries that work, with life-owned or bank-owned life companies and such, where working with the risk management team from a banking environment, it's a very different risk management model validation context, and it can add a lot of challenges for actuaries working in a different environment. But no, very interesting. Thank you very much. So I'd now like to introduce Fei Huang. She is of the University of North South Wales in Australia. Dr. Huang is an associate professor of the School of Risk and Actuarial Studies there at UNSW. Part of her research actually focuses on responsible AI and data-driven decision-making. So definitely looking forward to this presentation. I'd also call out that Fei also volunteers with the IFOA and another person supporting our profession. She's now a member of the Ethics, Governance, and Risk Management Working Party. So with that, Fei, please take over.
Thanks, Tim. Also, thanks, Matt, for the very impressive model risk management overview. Hello, everyone. I'm very excited to be able to share with you my recent research and also observations about how can we take those ethical AI components into the day-to-day actuarial practice. So let me start with the life cycle that we probably would need to use to develop any AI-related actuarial applications. So this life cycle that I present here include 6 components. It's actually pretty closely aligned with lots of other frameworks. They may have slightly different names or different stages, but it should be relatively similar. So I start from a problem statement. So basically, this is a question you ask, and then go to data collection, exploratory data analysis, and then formal modeling, and then evaluation of your model, and then deployment. So this has to be a feedback loop so that you can map that with the actual control cycle that we probably are familiar with. So stage 1 is corresponds to the defining the problem stage, and stages 2 to 5 corresponds to designing the solution, and stage 6, the deployment, also corresponds to monitoring the results. It will feed back to the problem statement. And then we can, from time to time, we'll check whether the results matches with the expectations that we set at the very beginning. So this is the problem-solving AI lifecycle or data science lifecycle. So before I start delving into the ethical AI adoption, I'd like to pose the question here for all of us to think about. If I want to ask you, what is the most frequent failure in this data analysis? What would you respond? I'll give you a few seconds for you to think about. So my question is, which stage do you think would cause the most frequent failure? Is it problem statement or data collection or modeling? What do you think? Okay, now let me show you a survey answer from a reference Lee and Pong statisticians, and then they published the paper in the Science magazine. So their answer is that the #1 most frequent failure is mistaking the type of problems being considered. So that means the failure actually occurred at stage 1, problem statement. So the first takeaway that I would like to present to you is about the importance of asking the right question. So what are the problem types then? In stage 1, we need to be very clear what are the problems we are asking. Here, also according to Lee and Pong, I summarize them into 6 different types. So I'll start from the first 3. So the first question type is called descriptive questions. It's basically we ask what has happened, and then we could use some summary statistical tools to answer this question. For example, calculate the average or the standard deviations of a data set. So it basically summarizes the main features of data set without doing any modeling or any interpretations. So an example is that, what is the average temperature in July? So this is the first question type. The second question type is exploratory. This usually happened at stage 2, stage 3. Before formal modeling, we do EDA, exploratory data analysis. So we want to understand what patterns or relationships exist in the data. Maybe we draw some plots, we look at the histograms, we look at the correlation maps, and we try to identify some anomalies in the data sets. So it's very important that we plot the data first before doing the formal modeling to gather some hypotheses or insights. And this example for this type of question is, are there clusters of consumer behavior in purchase data? So this may inform us to build formal models in later stages. Now let's move on to the third question type, is inferential. So from number 3, we move to the modeling stage from stage 4 and 5 and 6. So inferential question type, we ask, what can we infer about the population based on the sample? So if you have taken any fundamental statistical courses, then this is our most popular and the most frequently taught models that we have experienced. Like any regression models, we look at their coefficients, we calculate the p-values, we look at the hypothesis testing, and we quantify the confidence intervals. These are all about inferential questions, potentially. So because we want to infer some population properties from a collected data sample. Example here is, what is the average income of all Australian adults based on survey data? So you want to use the sample data to infer some population properties. So the fourth one is called predictive question. This is the most popular one in the data-rich world, or we can use potentially machine learning models, black box models to answer more and more predictive questions. So this question type is empowered by those black box machine learning AI tools. So this question is to ask what is likely to happen in the future, using historical data, using some complex or simple models to predict future or out of sample observations. Example in the auto insurance case is that, what is expected number of insurance claims or the frequency for a driver next year based on their age, location, driving history. So this type of models are also frequently used by actuaries. So it's important to differentiate question 3 and question 4, because if you are interested in question 3, then lots of the black box models cannot provide you with good inferential statistics. But if you're only concerned about predictions, then lots of the black box machine learning AI models can potentially do a good job, but not necessarily always give you best outcome. It really depends on your data structure. Now let's move on to the 5th question, the causal question. Causal question is very important, and for lots of the actuarial works, you probably are also very interested in causal questions. Causal questions ask, what is the causal effect of one factor on the outcome? For example, how much does wearing a seatbelt lower an individual's chance of diving? Or if you work in the marketing department, what's the impact of changing some marketing, procedures or behaviors would impact the consumers' purchasing behavior or your sales potentially. So causal questions is very important. It help us understand some causal effects and help us do some policy evaluations. However, unfortunately, for most of our actuarial education, we don't really teach causal models in our syllabus. This is actually one of the call to actions that I personally want to see more causal models being taught in our actuarial disciplines to empower actuaries able to answer more causal questions. Number 6 is a mechanistic question. This type of question is more deterministic, usually based on some physical laws. So you maybe build some partial differential equations, and then when you got inputs, the outputs are deterministic. There's no statistics or probabilities associated with it. So it's more common for physics or engineering. I think when I think about actuarial practice, maybe the physical climate models are more similar to this type of questions. But most actuaries do not usually need to engage with this type of questions in most of the actuarial practice. So most commonly used models corresponds to inferential, predictive, or causal. And the most common failure is that we misunderstood what question you're asking. If you're asking a causal question, you must use causal models. If you ask a predictive question, you may be able to use a wide range of models. So some of the models for inferential questions can potentially also be turned to a predictive model. We just don't care about those inferential statistics or those properties. While causal models, there are a whole range of different models. So for example, randomized control trials, difference in difference, lots of different tools that we could learn to be able to quantify the causal effect. But I think the number one takeaway I want to convey is that it's important to differentiate these different questions, so that you need to make sure that your model matches with the question you want to ask. Okay. Now let's move on to the second topic I want to focus on today. That is the AI ethics. Well, if you look at the headlines recently, AI is definitely a buzzword, and also ethics is also very important, especially for high-stake decision-making that actuaries usually have to engage with. For example, insurance, financial services. And when it comes to AI ethics, I personally think there are probably two perspectives. One is on the user side, another one is on the developer side. And because actuaries usually are more on the developer side, you probably are building some insurance, say, pricing models, claims processing models, or if you work for the banks or financial services, you may be able to develop some credit score models, or even if you work in the marketing department, you can build some customer targeting models. Well, all these models are more from the developer side. So in today's talk, I will also focus more on how can we integrate this AI ethics in model development from a developer point of view. And so here I summarize 6 principles. These 6 are not a exhaustive list, but it's very representative if you look at the different ethical regulations or principles that presented in different jurisdictions. The number 1 is fairness and non-discrimination. It means that we need to make sure we mitigate any direct or indirect discrimination that is embedded in either data or model design or outputs. The second one is transparency and explainability. So it means that we need to make sure that the decisions are interpretable, not only by developers, but also potentially customers and regulators. Well, I have to say, the second point, transparency and explainability, has to be tailored to specific line of business. What different application case would require different level of transparency and explainability. So this is a very important point because that will actually guide you for model selection. For example, if you're working in a very, very high-stake decision-making case and the regulators require extremely transparent, explainable model, then if you're doing, say, the predictive modeling that we presented earlier, then you probably have to rule out all the black box models because of this high level of explainability. So have a good understanding of the ethical principles can guide you through your model selection at the very first space at the very first place. So it's actually very important that you understand what's the requirements from your different stakeholders so that you can integrate that into the whole AI lifecycle. And the third one is called accountability. That means we need to make sure, as in the organization level, who is responsible when AI make errors? Is it the developer? Is it the actuary who are using the developed model, or the firm, or the CEO? So it has to be some, responsibility, that accountability that is already assigned when we develop these AI models. And number 4 is privacy and data ethics. This principle becomes more and more important as more and more third-party resources, telematics, social media data become potentially available. So one common, very popular quote that I heard is that the data you could have access to does not mean that you should use it. So you could use it, does not mean you should use it. You need to consider lots of privacy issues, data ethics issues, and these privacy concerns should also be combined with fairness and non-discrimination. Because if you use more data sources, then there is also potentially more chance to have proxy or indirect discrimination. So it's important that we have all these considerations in mind. And number 5 is contestability. So that means when people who are affected by the automated decisions have meaningful channels to appeal and recourse. So that means, for example, if you're working for an insurer and then you use some black box models to generate quotes, then maybe you will be challenged by some customers saying, why I got this price? Well, my neighbor got that price. We share very similar characteristics. So there should be some contestability, some channels for people to raise this appeal and raise this complaint. And you should be able to explain when there's such appeal comes in. And the last principle I present today is this called stability and robustness. So that means AI model should remain reliable and perform as expected under real-world conditions. This is especially important when we think about all the AI models are trained on historical databases. And it's almost guaranteed that, especially if you think about generative AI models, they are trained on the internet, almost or the whole world's open access database. It's almost guaranteed that the data are biased. Some of the data sets may be high quality, but others are low quality. So it's like a big, very wide range of database. So when you use this model, it's very important that you need to make sure that it's reliable and it's stable. Even if within your own organization, you train your own AI models using your historical data, then when it's applied to the future, does the future replicate the history? Or if you are opening a new service in a new area, does the model provide robust results when applied to new functions? So this sort of questions about stability and robustness. The concern is that this principle should also be combined with fairness and non-discrimination, because sometimes when the data is it's not uniformly high quality, it's likely that maybe some vulnerables or some minorities may face lower quality data sets within your bigger data sources. Then they may face a worse outcome compared to the others in this data. So you need to be able to understand what's the real impact on the different cohorts of your stakeholders. Okay, now we have a life cycle. We also have these principles. And how can we integrate them together? So the framework I present here is that we integrate all these principles into every stage of the AI life cycle. For example, in the problem statement, we ask, what is our objective? Have we considered fairness, explainability, contestability at the very beginning? And have we assigned stakeholder roles for the responsibility when AI make errors? For second, data collection, for example, we can make sure that we collect data that is legitimate, and also minimize data privacy invasiveness, and also ensure that we have meaningful consent. And for the number 3, it's about feature engineering. So it's important that you probably will do some data transformation or combining data with outside third-party sources. That you need to make sure that that's a feature. Is this feature, we should use that? Is it a legitimate variable? Does it contain proxy discrimination, or does it violate the privacy rules? And for the modeling step, I would recommend to echo back those problem statements. As I mentioned earlier, we should avoid the number 1 mistakes that usually happen in the data analysis. So make sure that the model you choose can answer the question. If your question is a causal question, make sure you use causal model. If your model is very complex and unstructured data sets, then maybe AI models would work better. But if your problem is like for a very structured data sets, very small, very easy to model, then maybe you don't need the AI model. Go back to the traditional linear regressions or generally less linear models. They may already provide you with the interpretable and accurate outputs. So modeling is very important to have a fit for purpose model. Of course, in the model step, we also need to consider other ethical principles. And then for the evaluation, traditionally, a modeler may be easy to think about, okay, let's look at all the accuracy measures, say mean square error or absolute square error. So there are lots of evaluation tools to look at, but most of the traditional tools only focus on accuracy. So here I would like to recommend adding much more tool here to make the evaluation stage also consider other criteria in the ethical AI lifecycle. For example, we should also add some fairness criteria, fairness testing, and maybe look at what's the real results impact or the accuracy measures for different cohorts of your customers. And also maybe look at how about the privacy, do some privacy evaluations, make sure there's no privacy violation in the model. And also look at whether this model is stable, it can meaningfully predict into the future. And for the deployment stage, we could look at, say, whether it's contestable, and then whether the model is audited for all those ethical components have been considered, and the result is reliable, and it can answer the question. So this is, again, you could add more components or remove some components. So this ethical AI lifecycle should be fit for purpose for specific lines of business. So there's no universal one-size-fits-all answer for this life cycle. But my point is that I want motivate you to think about what are the important considerations in each step. Okay, so if you're interested in this ethical AI life cycle, I recommend you to read this the Actuarial article that I wrote. Maybe last month, so you can scan the QR code. So one of the code I put there is that the actuarial profession should lead, not follow, in building public trust in AI system, because I would like to echo what Matt has just said, that the actuarial profession really sits perfectly in the spot that you combine the technical expertise with professional ethical standards and plus the business acumen. So I think the actual profession is in the perfect position to lead ethical, responsible AI, because that could build public trust in AI adoption, and especially for this high-stake decision makings. This article is the first article in the FOA AI Ethics Governance and Risk Management Working Party that I'm part of. I'm involved as a member. So there are more articles coming out. So I recommend you take a look at our articles generated in this working party. So now in the final maybe 10 minutes or so, I will present you with a case study based on my recent research paper. This case study is about just to present you with the pitfalls in AI machine learning interpretability, because it's very common that more and more firms are adopting AI machine learning tools, and then usually these models are not explainable. But in the literature, you will be able to see lots of explanation tools like partial dependence clause, Shapley values, Lime. It seems that although these AI machine learning models are black box, but I have access to a whole bunch of tools, explainable tools. Then combining this, maybe I can already solve my question perfectly. But I want you to be careful when you are using black box models and combine that with explanation tools, because there are pitfalls in the AI machine learning interpretability. And in order to uncover this vulnerability of these explanation tools, in this paper, we present you with an adversarial framework that we show you how we can manipulate partial dependence clause to hide discrimination, and present it using some real insurance data sets. This is to warn the profession that those machine learning interpretability tools are not perfect. And I will also present you some practical method. How can you get around with that? And then what are the practical recommendations here? So this is a paper recently published in the Insurance Mathematics and Economics journal. It's open access. If you scan the QR code, you will be able to download the paper. Okay. So as I mentioned earlier, explainability and discrimination are two very important principles for high-stake applications. They appear in almost every single jurisdiction's ethical principles, including Australia, including EU's GDPR, including the US. For example, in the NAIC, in the US, they require, if you are using black box models, then you must obtain some clause describing the relationship between predictor variables and target variables. And then what I have seen is that it's very common that if you're using black box models, then you would turn to those explanation tools that provided by some researchers. So this is a slide about just give you an overview of all the different interpretation methods. So I tend to classify the models or the interpretation tools into two categories broadly. The first one is what I call interpretable models or simple enough models. They include the linear regression, generalized linear model, generalized additive models, or decision trees. So the features of this model is that they are almost fully interpretable in the sense that you can understand the coefficients. And you can see how if you change one rating factor, for example, how the outputs change conditional on the other rating factors does not change. So it's not perfectly interpretable, but interpretable in the way that is quite transparent and you can understand and you can explain it. There is another type of model, what I call the black box AI machine learning models. It usually includes, say, random forest, backings, deep learnings, or even more complex models. So for this type of models, the key feature is that they are too complex for a human brain to understand what is going on there. Imagine there are millions of billions coefficients. Even though they are just the GLM stacked together like many, many layers, when it's one GLM, you can understand, but when there are millions of GLMs, then it's immediately become the human brain cannot solve this problem. So then we have multiple explanation tools to solve it. Here I list both global and local model agnostic methods. So for those ones that are highlighted in orange, they are based on feature permutation. So partial dependence clause, permutation feature importance line, and kernel shape. So in this paper, we will mainly focus on partial dependence clause, but the same idea apply to the other permutation-based methods. Okay, let's take a closer look at the partial dependence clause. So for those of you who are unfamiliar with this tool, partial dependence clause tells you that if you use, say, any model, including black box models, I can draw you a simple graph with X and Y, show you a curve so that you understand when there's a changing X, what's a Y value, what's the average change of the Y value. So partial dependence clause assume that the features to be explained are independent of the other features. It's basically an average out of the other features in the model. And if features, however, were dependent, then partial dependence clause would be based on extrapolations in the unlikely feature space in order to draw this nice partial dependence clause. So what what does it mean by unlikely feature space? For example, this plot is taken from Giles' paper, my collaborator. So Giles, in the 2004 paper, that he drew a plot that the blue dots represent your feature space, the real feature space, while the red dot here is unlikely feature space. So in order for partial dependence plots to work, you need to calculate the values in this unlikely space so that you can average them out to calculate the feature importance, the partial dependence plots. And because of this feature, what we can do is that we can exploit this unlikely feature space in the model and create lots of artificial or synthetic data points in this unlikely space to manipulate partial dependence plots will maintain the predicted value of the other realistic feature space, so that we achieve two goals. On the one hand, we maintain the prediction values for the real features, but on the other hand, we can fool partial dependence plots. What does that mean? Imagine that we are doing an insurance data set in this case, and the regulators say your age factor should have no impact on your price or on your claims cost estimations. But before the attack means that, okay, before I do anything, I draw my partial dependence plot. It's a curve like this. And then I can exploit this unlikely feature space to hide this discrimination potential, age impact on the price, to make it almost flat after my attack. So I developed a system so that I can maintain the prediction accuracy for the real feature space while manipulate partial dependence plots to make it look what you want it to look like. So if it's a curvature, I can make it a flat, or if it's flat, I can make it an increasing pattern. So these are all based on our paper. You can read that we only manipulate almost only 0.2% to 0.6% of the real data sets. But then we can almost change the partial dependence plot to any pattern you want, of course, conditional on your original data structure. So another astonishing impact we see is that as a side effect, before the attack, we can see that the feature, for example, in the simulation X1 to X5, they are almost have the same feature importance, and only X6 is insignificant. However, after the attack, we can see that they totally changed, and X6 should be no impact on the outcome. I can make it a very significant impact. So how does that work? So basically, I created a framework, and then using some classifier as CX, and then traditionally you only output FX, but now I output both FX and GX by having a classifier here in the middle of the framework. So in this process of fooling partial dependence plots, I maintain the prediction accuracy while manipulate partial dependence plots. So the takeaway for this example in this paper is that we can fool partial dependence plots while maintain the prediction accuracy. So that means partial dependence plots is vulnerable to these adversarial attacks. So the takeaway here is that when we choose model, so the first takeaway is that we should choose the right model for the right problem. For example, for predictive problems, if you're using some data set that's unstructured, complex, rich, and accuracy gain is significant, then you can use black box or AI models so that you can achieve your accuracy gain. But if for your user case, you are using a very structured, clean, tabular data, and explainability is high and accuracy is already sufficient, I would recommend stay with the interpretable models because of the pitfalls of the machine learning interpretability for high-stake decision making. And also, I want to say that in this paper, we only have conducted a attack for partial dependence plots, but actually all interpretation tools have their own assumptions, their limitations, their pitfalls. So when you use any models like either Shapley values or partial dependence plots, be aware of the limitations of these interpretation tools. And especially for PD plots, because of this experiment, we do not recommend to use that for fairness evaluation purposes. And if you do want to use partial dependence clause or other explanation tools, it's still okay, but we recommend to use multiple interpretation tools to reduce the potential risks, especially if it's not very high-stake decision-making. If you use, say, both PD clause and some, individual clause to see what the patterns are, then this risk could be potentially significantly reduced. And the final takeaway from my end is that I recommend you apply the ethical AI lifecycle and integrate all the ethical principles into every stage for the AI development. So I hope the message is clear, and I welcome any questions, and also feel free to reach out after the webinar if you have more questions. So hand over to you, Tim.
Fei, thank you very, very much. Very interesting presentation. So thank you for that. I particularly like, start right off with, start with the fundamentals. Be very clear on your business problem and what you're trying to achieve and how you're trying to achieve it. It's easy for technical people, and actuaries included, to fall in love with the model and go right to the tech and start, maybe lose the plot a little bit. So, focus on the fundamentals. I love that. But we do have one question up already, and I would encourage other people to submit questions in the Q&A section within the Zoom. Matthew Edwards, hello Matt, good to hear from you. As always, asked a very good question and also managed to promote an upcoming paper from the AI Task Force. So congratulations on that, Matt. I'm going to paraphrase heavily, but basically the question that's being raised is, how do we go about defining what ethics means? It's a very slippery topic. There are tools that we can use to manage fairness and bias and such. But if I could just leave it at that punchline, how if we, both people could give some color about how do we define what ethics means?
Yeah, I think this is a great question. To be honest, I don't think there's like a well, accepted answer to this question. But I think there are some commonly accepted, broad concepts. Like I listed all those principles of the ethics. I think if you check almost every single jurisdiction's regulations or their ethical suggestions, they always go through these different fairness or explainability, transparency, these principles. So that's my personal view, that I agree there's no well-defined answer, and people may have different feelings. And I also heard that sometimes people say they recommend not using AI ethics, but using, say, responsible AI rather than ethical AI. So probably for similar reasons. Yeah, maybe Matt or Tim, if you have any other suggestions.
I suppose I definitely echo, as Matthew had wrote in his question, that different people take a different view on this, and it's a bit like actuaries and reserving best estimates, perhaps. Three actuaries or others in a room would have a different idea behind what they meant when they said ethics. So I think the most important thing is not to get too hung up on that initial definition and cut down to, well, let's talk practically about what are we looking for, and also in terms of when you're getting down to kind of thinking about how do we manage ethical risks within models, particularly around things like bias and discrimination, as Matthew highlighted. We need to land on something pragmatic enough and practical enough that we can actually do something with it. So if you're going to be able to measure it and control it, you're going to need to work out a definition, and perhaps in practice that will just need to be something you'll need to work through with colleagues in the particular model that you're examining. But I'll await with interest the AI Task Force's even better answer in due course.
Yeah, and also I want to answer Matthew's second part of the question. You raised a very good question about the complexity of fairness definitions. I totally agree. Most of my research in the past several years are focusing on fairness definitions. And I can send you like 8 working papers, each of the paper focusing on different fairness criteria, and I've already seen maybe 20 different fairness definitions. This is definitely the question keep me awake at night. So my short answer to you is that there's no one-size-fits-all answer for fairness or bias. It has to be dependent on the line of business, on the application. And it's very important that if we want to achieve, answer this question appropriately, we need to work with multiple stakeholders and figure out what is an acceptable fairness definition for this community or for this application. If you talk about the health insurance, life insurance for different jurisdictions, the fairness concept can be all different. And there are also different levels of fairness. Do you mean like the data, fairness in terms of no proxy discrimination, or fairness in terms of like some cross-subsidy levels? They are all different. And the fairness, I would say, it's a concept, it's an overloaded concept. It's have too many definitions and meanings behind it. But if you're interested, I'm very happy to send you more related works.
Thank you very much. If I may add one comment, I think this is a complicated and fuzzy topic in terms of what ethics is. But the only thing I would add is, bring it back to the fundamental principles of how we operate as actuaries professionally. Define your terms. Be very clear about what you're speaking to, and make that available to your users so that they can challenge and have a proper discussion instead of things being vague. Brilliant. Thank you for that. Next question. There's a quick. This might be hopefully a quick question, but are there any tools to find out if things like PD plots, partial dependency plots, and such have tools to find out if there's been manipulation to some of these tools that we want to use for explainability?
Yes, there are tools. So in our paper, we present that if you plot the ICE plot, which is an individual plot, then if someone manipulate the PD, it should appear there. It should appear there. So you could request more plots rather than just the PD plots, also the ICE plots, for example. Then I can't say it's a totally mitigate risk, but can largely reduce the risk.
Fantastic. Okay, I'm going to jump a question just for simplicity's sake. Are there frameworks to help measure the fairness of Gen AI applications?
I personally have seen many papers, emerging papers. So for Gen AI, I would say this is still something we are studying. Every day there are new papers talking about, say, maybe today there are something about how if you use Gen AI to analyze, say, house prices, there are potential discriminations for different age groups or different genders. But then next time if you evaluate in a different context, so maybe in the HR scenario, you evaluate the job applicants using Gen AI, then it could be a different type of discrimination or a bias there. So in order to tackle this, we really need to do all the experiments with Gen AI and see the outputs. And I would say this is people are still working in this space. There's no answer yet.
Matthew, anything to add on that? Or? I think, yeah, for Gen AI in particular, just to echo what Fei said, I think there's a lot of kind of trial deployment stuff going on, and I think it's a rich area for thinking about, back to that model risk management, what tools and approaches can we use to validate these Gen AI models and their responses, and there is kind of emerging best practice across the much broader kind of modeling industry. So, for example, one of the things with Gen AI is you can get different answers if you ask the same question. So maybe one of the things you can do is, set up an automation to ask a series of questions multiple times and check how variable you get them. And then you can design sort of suites of questions to try to highlight things like factual inaccuracies, or, without trying to define it, back to the other question, trying to highlight whether there is bias or discrimination coming through in the model outputs. But yeah, it's quite an exciting and interesting area of rich development at the moment, as sort of industry best practice is really still just emerging. Brilliant. We're very quickly coming up on time. There's a question here about, if I could paraphrase it, I hope I get this correctly, basically asking if we do some analysis to find out a certain variable has a causal impact on something we're trying to predict, but that variable that has the causal impact is something of a restricted or protected or
variable is not allowed to be used for regulatory purposes, what do you do? I think we could address more of this a little bit offline, but I think you have to follow the regulations first and foremost. It's as simple as that. Maybe have a talk to with your regulator, and I know there's at least one regulator on the call right now. So stick to the regulations and have a discussion with your regulator. Could you share an opinion about possible collaboration between actuaries and compliance officers on topics about things like AI, fairness, ethics, etc.? I think that's an interesting one.
Yeah, so definitely for myself, as I touched on, I've had discussions with compliance officers, operational risk managers, IT, group legal, anyone with an interest in this. And again, it's back to, I guess, things we were touching on earlier. There's a sort of a shared but varied experience that each of us have in terms of AI, in terms of what we're hoping to get out of it, the risks that we're approaching it with, and certainly in my experience, AI is a great topic for which the more people you can have together discussing it, you can try to flush out some of those questions from earlier about, well, what do we mean by bias and discrimination for this particular model? How would we know? Who could test it? How would we do that? What are the regulatory impacts? How can we make sure we're aligning with those? Yeah, it's definitely, basically, I'd encourage any actuaries who want to get involved to reach out to any of the leadership team in their organizations who are tackling with these questions at the moment.
Yeah, I think it's a great question. I think it really touches on a general theme that we're to see more and more. I think actuaries, personal opinion, I think actuaries need to work more across disciplines, with IT, with compliance, with a number of other types of professions to get our job done as we start using these more complex models. With that, I believe we are at time. So we can and will follow up with the remaining questions offline. I would like to thank our panelists very, very much, Matthew Byrne and Dr. Fei Huang. With that, thank you everyone for attending. It was a great presentation, and the recording again will be available very soon, and look for the announcement of that. With that, thank you very much, and appreciate everyone's effort today. Thank you.
Thank you, team. Thank you, Matt. Thanks, everyone.